If you're continuing your education and thinking about taking out a private student loan, then you might be wondering, well, how exactly do they work and what makes them different from federal loan options? I know from experience that the whole process of figuring out how to finance your studies can seem daunting and really complex, but understanding the basics can make a big difference in helping you make an informed decision. And today we're taking a deep dive into how private student loans work. We're going to look at some of the best options out there and walk through things like the application process and what to expect in terms of interest rates and repayment plans. So by the end of this video, you're going to have a better understanding of whether a private student loan could be the right choice for you. Quick heads up, I've put affiliate links in the description for everything we're covering. If you do use them, I earn a commission at no extra cost to you, which does help support the channel. All right, so you may have already started researching private loan options, and if you have, then there's a pretty good chance College Ave has popped up on your radar. But if you're not familiar with what they do, they're actually one of my top choices for private lenders when it comes to education. So College Ave is an online student loan platform that connects students with loans and financial services through several different banks. Essentially, they handle the setup for the loans, though they're not the actual lender. But one thing I really like about College Ave is how simple their pre-qualification process is. You can do it right on their website, and it won't involve a hard credit check. So you don't have to worry about your credit score taking a hit. Now, once you're pre-qualified, all of the loan options you're eligible for will appear directly on the site. Then you could take your time reviewing them before moving forward with the formal application, which is the only step that impacts your credit score. So if you enter your information correctly, you can quickly see your options without any credit risk, which isn't something you find with every lending service. As for their website, College Ave is super easy to navigate and full of useful details on scholarships and loan financing. They offer loans starting as low as $1,000 all the way up to the full cost of your tuition. On top of that, they even have refinancing options if you already have student loans, which can help you reduce your payments or even pay off your debt faster. And like I mentioned, they are a private lender, meaning that they can offer both fixed and variable rate loans. To clarify, a fixed rate gives you predictable and unchanging payments, and at College Ave, fixed loan interest rates start at 3.19%. Meanwhile, a variable rate changes based on market conditions, and at College Ave, this rate starts at 4.24%. Now, to qualify for a loan from College Ave, you need to be at least 16 years old, have a social security number, and be enrolled in an eligible school. And if you're an undergraduate or an international student, you will need a cosigner. Now, the good news is it takes just 3 to 4 minutes to see if you qualify and find out what rates you might get. After that, you're going to be presented with various loan options for undergraduates, graduates, career students, parents, or even refinancing existing student loans. Then, you get to choose your loan term and your APR or your interest rate. And once College Ave approves your loan, they're going to verify with your school to confirm that you've been enrolled or you have been accepted, and that the loan amount you're looking to borrow doesn't exceed the school's cost of attendance, while also making sure that you meet your school's academic progress requirements. Then, after everything checks out, they will send the funds directly to your school. All right, now one of the perks of getting financed through College Ave is the flexibility of their repayment terms. They offer several ways to save on the total cost of your loan. For starters, making minimum payments while you're still in school can bring down your overall interest, since it shows them you're committed to repaying your loan, and they might even reward you by slightly reducing your interest rate. Now, you can also choose to pay the interest charges each month or opt for a flat $25 monthly payment while you're in school. Now, you can also defer all your payments until after you graduate, but keep in mind this option will definitely result in paying more interest over the life of your loan. Now, the reason I recommend College Ave is that they're all about students and getting you the best deal possible. They also have lower than average starting rates compared to other lenders in the industry, but do keep in mind their maximum rates are also much higher than average for student loans, going up to 17.99% on both variable and fixed interest rates for undergraduates. But their loans are structured to help you pay off your student debt as fast as possible, so they do encourage you to start paying while you are still studying. And those low starting rates are also there to help you get out of debt faster. If you want to check out what we're covering today, we have affiliate links in the description. Using these earns us a commission at no extra cost to you, which really helps support the channel. All right, so next up, we're going to take a look at a lending service that many Americans are pretty familiar with, Sallie Mae. Originally started out as a federal student lender back in the 1970s, Sallie Mae has since shifted to being a private student loan provider. Now, these days, they offer loans for both undergraduate and graduate students, as well as trade schools, and they even cater to part-time and international students. Now, compared to College Ave, Sallie Mae has fewer repayment options and fewer loan terms you can choose from. And while they don't charge any loan application fee, They also don't offer a pre-qualification process like College Ave does. This means that when you fill out your Sallie Mae's online application, it will affect your credit. So it's a good idea if you thoroughly check if you're eligible before applying to avoid any unnecessary hits to your credit score. Now, when you're ready to apply, you're going to start by giving them some basic personal details along with info about your school and the semesters you want to fund. You should also know your school's total cost of attendance, which includes not just tuition, but also expenses like meals, equipment, and books, along with any other information that's typically available on your school's website. Now, similar to College Ave and other lenders, your loan amount can exceed your school's calculated cost of attendance. And if you have a scholarship or plan to use a cosigner, you're going to need to provide that information as well. While a cosigner isn't mandatory, most students without one will need a strong credit history to qualify for a loan. But even if you can get approved on your own, having a cosigner could lower your interest rate, so it's worth asking a parent or another adult with good credit to cosign for you. Then once you've filled in all of the details, Sallie Mae will send you a loan application solicitation disclosure, which breaks down the rates, terms, and repayment options available to you. And if everything looks good and you decide to proceed, Sallie Mae will work directly with your school to disperse the funds. Now, as for loan terms, which means how long it takes for you to repay the loan, Sallie Mae offers fewer options than College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 years for MBA, law, and graduate school loans, or 20 years for medical and dental school loans. But like College Ave, their minimum loan amount is $1,000 and goes up to covering 100% of your school's certified expenses, but with a standard late payment fee of $25. And when it comes to repayment plans, you have three choices. You can either pay interest or a fixed amount each month while you're in school and during the 6-month grace period afterwards, or you can start making payments after you finish school and the grace period is over. Of course, like we already talked about, it's best to pay as much of it as you can while you're still studying if possible. Now, that being said, the most important thing to consider is the rate. And Sallie Mae offers a bunch of different rates, but because I focused on undergraduate rates from College Ave, let's see how Sallie Mae compares in that respect.
So for fixed undergraduate rates, Sallie Mae starts at 3.19%, the same as College Ave, and it goes all the way up to 16.99%, which is lower than College Ave's highest rate of 17.99%. And when it comes to variable rates, Sallie Mae starts at 4.37%, a bit higher than College Ave, while their maximum rate is 16.49%, which is also lower than College Ave's cap.
So look, to wrap things up, when it comes to getting a private student loan, College Ave might have slightly higher rates, but it offers a faster application process and a broad range of repayment options, including 4 payment choices compared to Sallie Mae's 3. On the other hand, Sallie Mae comes in with better rates and excellent support. So whether you prioritize flexible options with College Ave or you prefer the lower rates from Sallie Mae, both are great choices to pay for your education and support your academic goals. Ultimately, the decision between these two really comes down to your repayment strategy and your personal finances. And that's all for this video. I hope you found this helpful. And if you did, then please be sure to give it a thumbs up and subscribe to see more just like this.
And don't forget, you can find the affiliate links for what we covered right below this video. And if you do use them, we earn a commission at no extra cost to you, which helps support the channel.
Now, as always, I enjoy hearing your thoughts, so go ahead and leave your questions or comments down below, and I'll try and get back to them as fast as I can. Finally, guys, thanks so much for watching, and I'll see you in the next one.